Plant your seeds now so your kids can sit in the shade later. Invest in your future.
Welcome back to another episode of Sell or Fail. College educated or not, corporate or entrepreneur, A-type or B, sales is the great equalizer. And we're your hosts, Williams Brack, your favorite banker.
Samuel Nelson, the owner of Massage on the Go and Medical Massage of Memphis. We'll bring the massage to you anywhere in the United States.
And today we're talking selling investments with Floyd Tyler P.H.D CFA, President and Chief Investment Officer of Preserver Partners. Now, Floyd, of course, is the president and CIO of an alternative asset management investment firm based in Memphis, Tennessee. And just to be based in Memphis is a huge decision because most investment firms are based in major cities like New York, Chicago, and Miami. But Floyd staked his flag here in Memphis. And we're going to talk about how he's attracting investments locally here in Memphis and how he's building a black-owned firm right here in the Mid-South. We'll be right back with Floyd Tyler. You're listening to Sell or Fail.
And if you ain't selling, you failing. Let's get this money.
Welcome back to Funky Politics, the hardest hitting political show on the planet. This is the season to be political, right, folks? Yeah. I had to bring in a specialist today, none other than my good friend, Tanya Weathersby, who is a columnist, award-winning columnist for the Commercial Appeal newspaper right here in Memphis, Tennessee, baby.
Sadly, it looks like some things haven't changed. It's like we're in two different worlds. I don't want to say the polls were off, but polling is going to need to be reevaluated a lot. People saying that, oh, well, we got to try to come together. We got to try to talk more. We got to try to influence each other more. But how do you do that with somebody who doesn't even start with a basis of, don't even acknowledge objective facts?
Hey, this is DC. I am the host of Funky Politics. When you want to hear it real, right, and funky, you've got to make sure you hit that notification below.
Kudzukian. Check out all your Kudzukian favorites now. Download the Kudzukian app, available on Android and iOS.
Welcome back, Sell or Fail Nation. We're here with Floyd, King Massa Musa, the modern-day billionaire himself. What's up, Floyd? How you doing, brother?
How's it doing, Brother Nelson?
All right, man. Thank you so much for taking time and telling us about your sales strategy and how you got to grow your business. So tell us a little bit about what attracted you to selling investments and mutual funds and being a hedge fund yourself.
Well, I got interested when I was actually in PhD school, and I maybe was 24, 25, and came across mutual funds and different types of pooled investments that I had never heard of my whole life. I mean, I had done undergraduate work and master's, and certainly nobody around the table when I was young was talking about investments. So I didn't even know the world existed until I just came across an article and started reading about it. And I decided at that time I was going to go do that. What's appealing to me about the industry is it's a meritocracy, meaning every single day your ideas, whether they are valuable or money-making, get scored in the marketplace every day, right? The stocks or bonds, whatever, they go up or down every day. And so I thought that I could build a record based on my ideas and be rewarded for those ideas if they worked. And if they make money for me, they could also make money for other people. And so and it was also a skill that I could take anywhere, right? And it wasn't dependent upon anybody else. If I was smart enough to find companies that could grow and put those in a portfolio, then I could build wealth. And growing up poor in Memphis and not having much, I've always had this sort of burning desire to not be poor.
Yeah.
And it was, people ask me, why did you go get a PhD? Well, because I didn't want to be poor. And I thought it was a pathway to not be poor. And so that's why I work as hard as I do and try to help other people to, kind of bridge the racial wealth gap.
Yeah, PhD at 24 ain't nothing to just walk past. Though. I'm proud of that, though. At 24, I opened up my massage company, but you was getting the PhD.
Woo.
Yeah, so, hey, hats off to you, brother. Hats off to you.
And look, I'm going to call it an adjusted meritocracy, and we're going to talk about that later.
Fair.
But after being a director of research at a firm, right?
Right.
What research is a little bit, having the idea, finding a company to invest in is a little bit different than finding the investor to invest in your ideas.
Right.
So what attracted you to that side of the aisle versus staying in research?
Well, so in investments, like a lot of industries, if you're a revenue generator, you got staying power, right?
Yep.
And you control a lot about your destiny. So you can stay in the back and do research all day long.
Right.
If you don't have those customer relationships, you can't control the dollars that are coming into the firm or staying at the firm. You are dispensable.
Yep.
And I'm such an independent spirit. I don't ever want to be dispensable, right? So I knew once I was in research, there was an opportunity to go out and start to get clients and build those relationships. I wanted to do that, certainly because it was a learning experience, but it was also a kind of a defensive mechanism too, right?
Right.
Because if the clients like me knew me and associated me with their success, I became more valuable to the firm, but I certainly became more valuable to me, right?
Mm-hmm.
So that was important. I would encourage anyone that you don't make sure whatever you find yourself potted, build relationships, get some connectivity to the revenue side of the business, the sales side of the business. At least know how it works, if nothing else, if you're not going to be engaged in it.
Yeah, absolutely. Thank you for sharing that. And that's facts. And so I personally believe sales is for everybody, whether you're A type or B, however you think of yourself. Right. You can sell because buyers are different. And so how would you describe your particular sales style? Are you an introvert, extrovert, somewhere in between? Are you fact-based or personality?
I would say that I am probably somewhere in between. By nature, I'm an introvert, but I love talking about what we're doing, how we can help people to accomplish their goals. And so if you see me in a meeting with a client, you'll think I'm an extrovert. Outside of it, just on my own, I'm probably an introvert.
So when you come into the room, and say for instance you come to Side Street Grill, do you target your audience there, or is it more of a data fact? Like all the rich black people in Memphis or the rich people in Memphis, you go right to their office, or how do you get your clients? What's your target audience?
So we have what I would say, kind of a balanced strategy. We have in the alternative side, the hedge fund side, that's more really geared toward high net worth, accredited people that are, I would say, can invest at least $250,000 a single time. So with those folks, it's mostly word of mouth and referral. With the mutual fund, it's a much broader audience, and we can advertise, we run commercials, we do social media, because the minimum for the mutual fund is only $2,000. So it's a lot more accessible than our hedge fund products that are, start at $250,000. So with them, we do all those things I just talked about, and there's also continues to be word of mouth and networking. For us, because we are a relatively young firm, being only 10 years old, we still have a long way to go for people to know who we are, right? There's a lot of people in Memphis who still don't know who we are, right? And so we're working on that. We're trying to fix that, and we'll try a variety of strategies. We do sponsorships, we do some workshops. The only thing that we found that doesn't work for us has been cold calls. Outside of that, most of the other things we typically can get some traction, but cold calls just don't work for us.
Okay, so for our Seller audience, explain to them what's a hedge fund, because we all seen Wolf of Wall Street or we hear about it, but what is that and what are you selling to the hedge fund people?
And compare that to a mutual fund.
Right. So let me start with a mutual fund. So think of a mutual fund as it's essentially a pool of funds where lots of individuals contribute their money into this one pot, if you will. And so everyone's in that pot. You own a pro rata share of that pot. So Sam, you put in $1,000 and that pot has $10,000 in it. You own 10% of that mutual fund, and you get 10% of the gains and losses of that mutual fund. And Brack, if he puts in, $2,000, he owns 20%. So it's a pool. And so from that pool, we take that money and we make investments in various securities, all right, and build a portfolio. And so that portfolio goes up and down along with the value of the underlying securities. And each investor's account goes up and down with the value of those securities. And so it's registered with the SEC, it's liquid, it has a ticker, you can put it in any browser and see how it's doing every single day. Now, mutual funds are generally for what's called sort of the mass market, right? So we have a low minimum, just like a lot of funds. And so it's a way for people who have smaller investment amounts to get a diversified portfolio with one investment.
So you actually create mutual funds at Preserver Partners?
Yeah, we have a mutual fund. It's only 4 in the country. There's only 4 Black-owned mutual fund companies in the country.
And you have one.
And we have one here in Memphis.
Living legend. Y'all sleeping on them.
Yeah. Anyway, and we've been doing that for the last 4.5 years, and it's a good performance, a good solid investment for folks. Now, on the hedge fund side, that's where we delve into much more complicated or much more uncorrelated strategies, right? These are strategies that are different than just traditional stocks and bonds, things like trade finance receivables or art lending, we might do some lending facilities to people that buy and sell homes. So we do a lot of really esoteric, really interesting things. And the idea is those it's still in a pooled vehicle. It's just that it's only for accredited investors who have the risk tolerance to invest in something that's not quite as conservative as stocks and bonds, right? So hedge fund is just a name. It doesn't. There's all different types of strategies that are called hedge funds, but just think about it. These are very interesting, uncorrelated strategies that are not as traditional as stocks and bonds.
So that makes sense. And the most important part of what you just said is those hedge funds typically can garner higher returns because they're a little bit riskier than your mutual fund. So that's an important point as well.
And they're good diversifiers too. Let me just add that they typically they're very diversifying to a traditional stock and bond portfolio, right?
So I need $2,000 for the mutual fund, but I need $250,000 for this hedge fund.
Correct.
So okay, so I can be counterpole and be in the mutual fund, but I need to have some money in this hedge fund. That's basically what you just told me. Okay.
and so, what are some of the most important questions investors should be asking you?
So certainly that you want to try to understand the history, the background, the credentials of the people that are going to be managing the money for you. I think you want to understand the strategy, make sure that it makes sense, that it's proven, how it fits into your particular portfolio and how it might help you to reach your goals. We're registered with the SEC, so there's a layer of protection and oversight that comes with that, and I think people should be comforted by that. But I think you want to ask the same kind of questions you would ask any financial advisor.
Well, look, that's very helpful, and that's a great foundation for the rest of our conversation, because what we want to talk about now is the actual selling. If I'm a institution and I'm looking to invest into a hedge fund, we want to know kind of like a case study of what Floyd Tyler and Preserver Partners presents in order to close some deals. And so that's what we're going to talk about in the next segment. You've been listening to Sell or Fail.
And if you ain't selling, you failing. Let's get this money.
And we'll be right back after the break.
Oh, boy.
Welcome back to Funky Politics, the hardest hitting political show on the planet. Coronavirus, this thing is not going anywhere. Wash your damn hands. On today's show, Teresa Hassler. Oh my God, this is a creator. She's a creator of the Ratchet Politics show.
Welcome to America. The whole idea, behind America, at least in its founding was you can come here and basically do what you want to do.
Do we cut off Kanye? Do we cut off Ice Cube from the barbecue now?
I think that you can be, affiliated with a certain political party and still be fully aware of your blackness in America.
This is the best damn political show on the planet, and to make sure you never miss anything, we got a bunch of great shows upcoming. Hit that notification below. Hit that notification button right below so you can make sure you never miss a thing. I'll see you again right here on Funky Politics.
Kudzukian. Check out all your Kudzukian favorites now. Download the Kudzukian app, available on Android and iOS.
Welcome back to Sell or Fail. We're here with President, NCIO, CFA, Mr. All Everything Investor.
The alphabet boys.
So PhD. He got all the letters
He
behind
got all
his
the
name.
letters. Yeah.
And so I just want to give him all my money just based on that.
Right.
So, so what we want to talk about is actual selling, a case study. Right. So if I have 250,000, let's say I have 100 million, and I'm an institution, and you're coming into the room for the pitch.
Right.
One, how do you find me? And take me through to the close after you found me.
Right. So we'll find you a number of ways. There are some databases in the industry that catalog institutional investors across different categories. That's one way. We also do just prospecting of, where the pots of money are. Right. So generally in a city such as Memphis or Nashville, you generally know where the public dollars are. Right. And where a lot of the wealth is. You don't know where all of it is, but generally I can tell you in this town who has $50 million or more, right? So we'll reach out to those folks. We'll, through emails, relationships, try to get warm introductions to try to get face-to-face. Because that's it. You got to get face-to-face when you're talking about moving, people moving, writing your check for $10 million or $5 million. They got to know who you are, right? So we try to get a face-to-face meeting. We'll do some advanced due diligence to try to understand what their portfolio looks like, right? And about as much as we can about how they've moved in investments historically. Get that meeting, try to listen a lot, ask them what some of their pressure points, what are they trying to, what's work, what's not work, what are they concerned about? And then try to weave a story, a narrative of how Preserver can help them with those pressure points or those pain points. For some clients, like one of the ones I'm thinking of, we closed, I think it was a $10 million account. They really needed income, and our strategy generated a lot of income, right? So we knew they needed income because they had to, they have to make these benefit payments. And with bond yields being so low, they weren't getting it from their fixed income portfolio, right? So our pitch to them, we'll adjust our material some, is, hey, we can give you the income that you need, solve a real problem for you, but not add to your risk profile and actually be a diversifier to you, right? So you think of a lot of times when you're pursuing a particular investment objective, there has to be a trade-off. So we mitigated that, right? By saying, no, you don't have to trade off, right? So we can generate 7% income for you, which is double what you're getting on your fixed income portfolio, not increase your risk profile, and give you a what's called a liquidity profile, meaning that your money's still accessible to you. And that was attractive to them.
Now, hold up, Floyd.
Yes.
I can't believe that. There's no such thing as increasing returns without adjusting for risk, like increasing risk.
That's what I'm sitting here thinking, like, what?
I've never heard of that before.
Well, that's why I'm here to educate you.
I told you, Masa Musa.
No, so what we're after is risk-adjusted returns and risk-adjusted yield. And so our strategies, we're trying to generate a premium amount of yield for you without dramatically increasing your risk, and certainly the risk that you're most concerned about. So we were able to close that. They've been a client for, I think, 3 or 4 years, very happy. Generate a lot of income from them and generate an attractive return. So to give you another example of an individual with respect to the mutual fund, lady comes in, has maybe $45,000 that's been sitting in a bank for 2 or 3 years, not making any, sort of any real yield. She's concerned about, doesn't know much about investing. This is all the money she has in the world, is somewhat apprehensive because she's heard stories about advisors taking advantage of people. And so we were able to kind of understand what her concerns were, show her how we could, our fund was a really diversified portfolio that didn't have a lot of, had really balanced risk, had an attractive return. For her, because of the integrity issues that she had experienced in the past, transparency and trust was very important, right? So, it was myself and my partner, Dana, sitting across the table from her and building that rapport and building that trust and integrity. She wasn't going to understand everything that we were doing in the investment portfolio from one meeting, right? But she could sit across the table from you and say, okay, I think these people know what they're talking about. they're credentialed, they have experience, and I think I can trust them. And so for her, it was trust, integrity, and then a solution and a willingness to walk with her. And so one of the things that we recommended to her and others, we'll say, look, if you have $40,000, just start with 10, right? See how that feels. See how we do. Drive by the office, make sure we're here. Those kind of things. Right. What happens oftentimes is they start with 10. In her she did the exact same thing, and then I think maybe 2 or 3 months later she added, and then she started to send some additional referrals. So people are at different spots in terms of their knowledge and in terms of their walk, their investment walk. And so you got to be willing to work with them and walk with them.
Doing this, as I say, Trump era, we have seen a lot of people take their hoods off and be very radical. Have you experienced some of those situations being a black firm in Memphis?
So this by far is the hardest thing I've ever done. I think it's harder doing it in the South. I think it's harder doing it in Memphis for a lot of reasons, but many of those reasons are why we need to be here, right? So yeah, we've had situations where it seemed pretty clear we didn't get the mandate because of our skin color. We've had some of that. Specifically this summer, the firm wrote a pretty strong Black Lives Matter statement. And shortly after that, we got a few phone calls from our clients and expressed some displeasure. And we certainly, disagreed and felt certainly very strongly that we, have a right to express whatever opinions we think are appropriate. And I think 3 of those we lost. That was the first time we'd ever lost 3 clients. Like we have a very stable client base, but they all decided, they indicated that they were strong MAGA supporters and didn't think Black Lives Matter was American, and so they decided to redeem, and we're very comfortable with that, and we'll go build wealth for other people.
I love when you could be at the place, like, are you gonna leave? Go on, leave. Let me help you pack. Let me help you pack up. So that's great. I know as being a massage therapist or being in that realm, I have experienced a lot of issues. I don't say a lot, but it's a white female dominated industry until now. And then I've noticed there are more African Americans getting into massage therapy, and it's helping gain knowledge that we're more than what people see on HBO. So again, my hats off to you for being in the position and educating us on what you really do.
And I'm a commercial lender in the finance space, and I used to have my 7 and 66, and looking for the money and looking for the business, as you and I will find out that it's extremely white male dominated.
Right.
And so how are you building relationships across the racial and age gaps that exist for investments?
Right. So I would tell you that this may surprise most people, but probably 20% of our clients are African American. 80% are not.
That doesn't surprise me.
It don't surprise me at all. 90% of mine. I understand.
So one is we try to represent ourselves as being highly professional, institutional quality, and performance oriented, right? And so that attracts a lot of people. That attracts a lot of people, certainly from the majority community, but also attracts people from the minority community. So we do think we have materials that kind of speak to those folks, but we also have the work we do with the mutual fund, some things we do on social media and financial literacy workshops that speak to younger people and a different audience. We've done some millennial workshops, and we try to have some content that kind of lets them know it doesn't, you don't have to have millions of dollars to get started, right? So I think part of it's just messaging, but also how we try to represent ourselves and try to be accessible, make sure that the firm is diverse across age groups. I'm the oldest person. I'm 52. I'm the oldest person in the firm. We have to people that I think in their 20s. We have interns around here periodically. We're going to make a couple hires next year of young people. So I think you need those young people because they often have a perspective and a realness that, you know, I may think, well, this is how we should present this, but I'm from a different generation, right? So I think, you know, it's important to have that diversity of staff across age and just kind of be aware of the messaging that you're putting out.
Well, you talked about social media and diversifying your hire, but because of the coronavirus, have y'all had to change and lean more on social media, or have your company been affected because of the coronavirus?
So we're fortunate that we're in a business that certainly can work remotely, and one that isn't dependent on social gathering, right? So we were able to go remote, still invest, still manage portfolios, still connect with our investors. So we weren't affected in that way. I think the biggest thing is that we don't do meetings. You know, we don't do many sort of one-on-one meetings anymore. It's all, you know, Zoom, like a lot of folks. And then just travel. We're not traveling the way we were, you know, prior to the pandemic. But that's really I would say the biggest change in just the business. And then on marketing, we have an okay social media. Just being honest, social media presence. You know, we're not. I don't think we're killing it. We're getting. You know, we're spending money on things like display and social media and you know, posting and things like that. But I don't know that it's changed much. You know what I mean? I don't know. It feels about the same. You know, the responses to it seems about the same. We were actually talking the other day. You know, it kind of seems a little odd to be marketing in a pandemic. You know,
there's always money to be made.
I understand, but just trying to reconcile that. You know, it's.
I understand. There's a lot of broke people right now, and you know, you take into consideration to them not working and stuff like that.
Right.
Yeah,
right.
I understand.
So, but the institutions are still doing business, right? They still have money to manage, and so we've got to make sure that we're reaching out to them.
Well, we appreciate that, and I think that would be a good segment. And I'll tell you, when McDonald's stop marketing, maybe you should too.
Right.
Because hey, there's money moving. It might as well move in your direction.
Yeah, that's a good
point. And so in the next segment, as we close out, we want to talk about books and mentors and final advice to the Sell or Fail Nation from you. And that's how we're going to close it out. You're listening to Sell or Fail.
If you ain't selling, you failing. Let's get this money.
And we'll be right back after the break.
Oh, boy.
Welcome back to Funky Politics, the hardest hitting political show on the planet. I believe that this country is still a great country, and we are going to do the best we possibly can. I've got a very deep expert, Paulo. Oh, you guys know this guy. He's been on the show before. Paulo Nunez Bueno. He is a transportation expert, a transportation policy expert, but this guy knows everything.
How do we put communities of color in the driver's seat when it comes to finding solutions to our climate crisis and making, you know, environmental justice by creating solutions that focus on equity?
Hey, this is DC, host of Funky Politics. Anytime you want to catch the latest and the greatest, the hottest, let me tell you something, you want to make sure you listen to Funky Politics. So hit that notification below and you'll get our latest shows right here on Funky Politics. See you in a bit.
Kudzukian. Check out all your Kudzukian favorites now. Download the Kudzukian app, available on Android and iOS.
Welcome back to Sell or Fail. We're here with Floyd Tyler, President and Chief Investment Officer of Preserver Partners. Now, you have a bachelor's, a master's, a PhD, so you're no stranger to reading, and the investment landscape is ever-changing. So what are some of your favorite books that you've read and some of your favorite books that you like to recommend to others?
Probably my favorite book of all time is Think and Grow Rich by Napoleon Hill. It's a classic. I mean, it's just the principles are timeless. So I think that's one that I would recommend. There are lots of different investment books, you know, but I think you gotta, you know, I try to stick to classics, you know, Benjamin Graham, because I think that they're timeless. So I would, I would
that's
say,
The Intelligent Investor, right?
Yeah, I'm sorry. Yeah, The Intelligent Investor. I think that's a good one because it just teaches some principles about company fundamentals and valuation, things like that, that help to keep you focused on the things that are most important and what you can control, and not not sort of so trendy. So think of the moment.
So you can stay the course and not get distracted by the stock of the day, so to speak.
Well, and what's happening? I hear these stories about these kids on Robinhood, and they're buying foreign exchange, and
not FX. You didn't say anything. Oh man,
FX or Bitcoin.
You're gonna get some hate. You're gonna get some hate mail if you talk about foreign exchange.
We were talking about Bitcoin this morning, Floyd.
But just think about this for a minute. I mean, just like on the FX, you're in your basement with $100 in your account, trading against the largest foreign exchange companies, brokers, traders in the world, with quantitative systems and technology and data and research and resources that you can't fathom. And to think that you're going to win that based on skill, going against them for the 30 minutes that you're in your basement doing this, and that's going to be attractive. You're going to make real money after taxes, after accounting for your time. Come on.
Come on, man. So look, I'll tell a quick story. So some of my friends, they called me about an investment opportunity, and I think part of it had to do with foreign exchange. And they tell me, hey, this guy, he can guarantee somewhere between a 14 and 20% return.
I don't believe in guaranteed, but
when they used the G word, my answer immediately was no. Right? And so the guarantee was my first no.
Right.
My second no is, if this guy is generating 14 to 20% return, that's better than some of the best and highest paid investment advisors in the entire world. He don't need to be on my line.
You know where the money is?
What's that?
The money is in what they're selling these courses in this. So what happens is they go on Instagram and they say, hey, you can sign up for my course for $100 and I'll show you my system, how you can make $1,000 tomorrow. So if you sell 1,000 of those $100 courses, right? That's the money. The money is not in the trading.
Right.
You trying to learn from this guy. The money, he's making the money by convincing you to buy his course, which is just something it's insane to me that people do that.
You know what, Floyd? You are right. We need to get one of those people on Sell or Fail, because those are top-notch, top-rate salespeople.
Right. Right. I mean, because that's the new hit with Amazon. Amazon only lets you have so many accounts. So once you open up that account, they selling how to grow your business on Amazon for $1,000. So you sell 3 of them a day. That's how you're really making your money.
Right.
Yeah.
And the thing is, it's age old, right? It's people have been selling get-rich-quick schemes, different varieties and structures for years, right? And this is just another version of that.
And all the professional investment people are absolutely disgusted by it.
But Floyd, who mentored you? Who was your mentor now?
In the past, I had when I was in college, there was a professor, Dr. Bob Figgins. So he was really, he's passed on now, but he was really instrumental and really kind of took me under his wing. Now I don't really have a mentor in the investment business, but I have people that mentor me who are really good business people. Because one of the things that I've learned, I think I've become a better business person. I think I'm a good investor, but early on, you have a skill and you can be really, really good at that skill, but turning that skill into a business takes additional effort, work, considerations, right?
Right.
And so, because you got to price it right, you got to staff it right. You know what I mean? There's just a lot of, things that I think sometimes people forget. I'm a great plumber, but starting a plumbing business is different. So, there's some people around town here in Memphis that are instrumental, and I can kind of ping them on different topics, different issues. So that's helpful. And I think that's good. I think everybody should try to find people that truly understand what you're trying to do, and who are willing to pour into you. And I think in turn, you have to reciprocate that, right? Some way. They may not need, they may not need your advice, but I think you want to try to make sure that relationships are mutually beneficial.
Yeah, and that's something very important. I always recommend the book Emails Revisited because it talks about that. Have you read that before, Floyd?
No, I have not read that.
It's a good book. It talks about the 3 people you need to run a business. You need the entrepreneur, which is the thinker. You need an office organizer, which is the office manager, and then you need that technician. In the book, it say you can be 2 of the people, but you can't be all 3. And it's good to separate that role so you can focus on growing the business instead of working in the business.
You can't. One of the things I'll tell you honestly, I mean, our struggle is our biggest deficit is sales and marketing, right? We do it. I'm convinced we don't do it as a high level as we do investment, right? And part of that's because we don't have a dedicated person who walks in every day thinking about sales.
Right.
I think about sales some of the day, and I have other people that think about sales some of the day, but not every day, right? With the consistency that we want. And so I think it's really important that if you're going to scale, you can't do everything.
Yeah. You can't. You got to delegate.
So any closing advice for Sell or Fail Nation? That could be life advice. It could be investment advice. It can be advice from Floyd's think tank or journal or something. Any advice for Sell or Fail Nation?
I'm a big believer in betting on yourself. And there's no substitute for the work. I think if you got to do the work, you got to put in the time, but bet on yourself, believe in yourself. As people say, try to surround yourself with good people. All that stuff really, really matters. And I just don't think there are a lot of shortcuts, right? Entrepreneurship and selling is, well, let me say this one last one I want to make. Sometimes I hear people say they don't like sales, but they want to be entrepreneurs. It don't work.
It don't.
Amen.
No, and everybody in the organization needs to be thinking about sales. Every opportunity we meet somebody, every phone call, every time somebody calls Preserver, who's a prospect or who's a vendor, it's an opportunity to make an impression. And it's an opportunity for a future referral, right? So the whole organization has to understand that the lifeblood of the organization, for us, it is capital and returns. That's the lifeblood. So sales is getting that capital, right? So if you poo-poo that and think that's not your job or you don't have any role in that and you don't really care what goes on with that, then what you're saying is you don't care about the future of the organization.
Well, Sell or Fail Nation, you've heard me say plenty of time, until you put your money on the treadmill, you'll forever be on that treadmill. And this is what I'm talking about. Your money has to work for you. Make sure that you invest in your future so you won't repeat your past. Money ain't going to wait on you. You got to take the money to the watering hole and feed it a little bit, and it'll grow. Sell or fail. If you ain't selling, you failing, baby. You got to get to this money, and we out.
Floyd, thanks you again for joining us on Sell or Fail Nation.
All right, Floyd.
And Sell or Fail Nation.
If you ain't selling, you failing.
And we'll see you next episode.
Let's get this money.
Woo!